Nils Anden, CEO, and Patrick Kortman, Interim CFO. Strong performance across select markets enabled delivery on annual target. What would you say, Nils, are the key takeaways from the Q4 report?
Well, as you mentioned, we did reach the financial target that we had set out for 2023, which is, of course, something we should be very proud of as an organization. We came in at an underlying EBITDA of 204.5 when we had said we would be at least 200, so we did have a little bit of margin of error as well. This was driven predominantly by strong development, particularly in our two largest markets, Netherlands and the UK, which is really nice to see that we continue to grow above market rates in those markets, and supplemented by strong performance in select other core markets like Romania and Denmark. I think generally speaking, other highlights for me is continued really strong development, particularly in our casino and game segment, which continues to grow nicely. And of course, very promising to see that Relax Gaming is continuing to grow at such a clip and delivering an exceptionally good underlying EBITDA for Q4 as well.
And if we look at locally regulated gross winnings revenue, 82% came from locally regulated markets in the quarter. And Patrick, if we look at the betting duties, they were at an all-time high. So betting duties are increasingly being absorbed, and the scalability of the group continues to improve. Why would you say that is?
Yeah, this has been a important element in Kindred's history, making sure that we can absorb increased betting duties as we grow in locally regulated markets. So if we just put that in numbers, we last year we had reached revenues from locally regulated markets of around 960 million. That's a 16% year-over-year increase compared to 2022. That resulted in a 45 million increase in betting duties. So we came up at 318 million in betting duties. At the same time, we managed to increase our underlying EBITDA by 75 million. So it just shows that we need to keep our cost base intact to allow for the increased betting duties. And now with the cost initiatives that we announced in November, that's of course an element also to secure that we can continue to grow locally regulated market at the same time increasing our underlying EBITDA, and we do have a target to increase our underlying EBITDA to reach 250 million in 2024.
I think it's also worth calling out that this is a journey we've been on for since our local markets started to regulate, and we have shown throughout the last 14 years that we can absorb betting duties across the group. We've maintained a fairly even underlying EBITDA margin, with of course some changes when key markets regulate, but we then quickly come back to the historical average.
Yes, this is something that Kindred surely has a strong track record of. If we look at value drivers for Kindred going forward, Kindred sportsbook platform is one such element, and we are now live in production in a small test market. Nils, how would you say, are you happy with the strategic project, how it's been developing so far?
Yeah, I would definitely say so. I think we've hit every milestone that we've set up for ourselves when it comes to KSP. And as you mentioned, we are now live in production, and we will during the quarter start inviting customers to test the product. But I'm very confident that we can continue to develop in the trajectory we have and start migrating select key markets throughout this year. So very proud of the work the team has been doing.
Yeah, and can you remind us of the benefits of changing to a proprietary sportsbook for Kindred?
Yeah, absolutely. I think it's a very it's a strategically very important project for us for a number of reasons. So if you just look at the pure customer experience, this allows us to really tailor the offering and the product to what our customers need, not what a wider range of operators' customers need, which is the reality when you work with a third-party supplier. So it will allow us to integrate our reward toolkits much better, provide a more holistic journey to be able to reward customers at the right time with the right offer. But it also allows us to change our pricing more dynamically between different markets and even deeper within each market, and ultimately control the destiny of what the product roadmap should look like. And then, of course, there are inherently financial benefits in the long term once we have fully migrated onto KSP.
Yeah.
And as we said this morning on the earnings call, we do expect to start to see benefits already this year in regards of lower cost of sales related to the sportsbook, but I think the big benefits will come only in 2025 and beyond.
So there's a growth benefit clearly, and there's also a big financial benefit. So truly interesting to follow this this development, and a good amount of upside also will come from the B2B arm going forward. Hopefully, we have Relax Gaming that's continuing to show a very stellar performance, both encouraging growth but also proof of scalability in the business model. Can you, Patrick, add some color on Relax performance during the quarter, Q4, and also on how Relax contributes to Kindred as a group?
Yeah, so Relax continues to deliver very strong results, both in terms of revenue growth, but especially now in terms of EBITDA contribution. And this is actually a trend that we have seen for quite a while. It's not only in Q4, so they have had year-over-year growth over the last 2 years, essentially, and when you look at quarterly growth. I think there are, of course, a lot of hard work, a lot of different elements are driving that, but I think clearly good content and constant flow of new game releases. They released 10 new games during Q4, which 4 were exclusive games for Kindred. It's a broader distribution, which means that they're broadening their customer base, they're broadening their geographical footprint, and here a good example is the recent launch in New Jersey in December. This launch in New Jersey in December, that didn't really impact the Q4 numbers, but that's a new opening, a new market that will fuel growth over the coming quarters and years. But yeah, we're very pleased with the development in Relax in short.
Yeah. Nils, in January, Kindred received a public cash offer on all outstanding SDRs from FDJ, and this offer is recommended by the board. Would you say that this in any way impacts Kindred's operations?
We know what we need to do as an organization, and that is true irrespective of this bid or not. We have a very clear strategy of what we need to achieve as an organization in 2024, and this bid does not change that. I think it's even very comforting to see that some of the strategic decisions and the directions that we set out in our Q3 report in the latter part of 2023 were actually called out by FDJ as positive indicators and key reasons why they are also making this offer. So for us as Kindred, the task is very clear, the direction is very clear, and we need to just continue to deliver on the strategy that we have already initiated.
Yeah, and there's quite a long acceptance period that will expire around mid-November, so yeah. Absolutely. Yeah. So for us, we just need to continue focus on delivering core market growth and delivering on the key strategic projects that we have. Yeah. And if we take a look into 2024 and the operations going forward now for Kindred, we're 1 month plus into 24, and Kindred's aim during this year is to outgrow its core market footprint. As you were alluding to earlier, there's been several growth initiatives to support. How would you view the possibilities of achieving such a growth during the year? I think we're really well set up to continue to take market shares and grow faster than the underlying market growth in our core markets for a number of reasons. We know these markets, we have a track record of performing in these markets,
And also with the exit of North America, we also have the ability to reallocate resources, both in terms of development, in terms of just people, but also in terms of marketing investments. We can start accelerating really smart marketing investments where we see very good payoff into these core markets. It is already kind of a fairly decent underlying growth in these markets. I think it's estimated to around 6-7%. And I have all confidence that Kindred as an organization can outgrow those sort of market growth numbers. This is also a very exciting year, right? We have the Euros and the Olympics, so it will be a summer of sport for us that will drive a lot of activity.
Really looking forward to follow this journey. Thank you both very much for your time.
Thank
Thank
you.
you.